Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, the Australian dollar still remains around that 69-cent handle, even though it has slipped slightly this morning, as broad US dollar strength holds despite stronger than expected Australian employment data released yesterday. May employment increased by 40,300, while the unemployment rate eased to 4.4%. However, sticky core inflation at 3.6% continues to complicate the Reserve Bank of Australia's policy outlook. Meanwhile, the anticipated Federal Reserve's preferred inflation gauge, the core PCE price index, matched expectations. Looking at the headline, PCE rose by 4.1% annually, while core PCE held at 3.4%, reinforcing the higher for longer interest rates and underpinning the greenback, which holds around 101.50.55. Turning to the technicals, they still remain heavy. Now, keeping an eye on this base, I feel there is still weakness to come if we see a break of 70, as we're getting quite close to it, and maybe down towards 68.35. Then I expect a correction back to 70 cents and reassess from there. We are getting oversold, and the trend is overheating, so keep an eye on that if you're trading the Australian dollar. Turning to the euro, the market is still holding clearly above that firm level of 113.40.50 after the US economic data reinforced the Federal Reserve's higher for longer stance. Besides the PCE, we also got the final GDP price index, which came in at 3.6 quarterly, highlighting persistent inflation pressures. Now, from that, the market is looking next week to the US non-farm payrolls and also the FOMC minutes for further direction that could see a little bit more downside. As we turn to the technicals, there is still room for a move towards this key area, seen somewhere around 112.65.70, but we would need to see the break of 113.40.50 to support that call. As we look to dollar yen, well, the ranges are getting very tight, as still risks of a potential intervention move that could see one of these candles come through and see the dollar yen collapse back to 158. I still feel that is the call, especially with there's a bit of divergence here in the MACD. So let's see if we get that. And along with that, we've got a doji star from last night. So keep an eye on that too. Looking at sterling, well, the market is showing bullish divergence. So I'm not as bearish when it comes to the British pound. Therefore, look at crosses, or maybe even look at it against the US, because from this point to this point, could see the move back towards 133 as we trade currently at the moment around 131.85. If this bullish divergence is strong, let's see how it plays into today. Finishing off with commodities, well, we've got a shoulder, head, and a potential right shoulder forming. As long as we don't go much lower than where we are, then this could hold out to the right shoulder and see a correction back towards 4,250, which is still quite way away. And therefore, we would have to wait for the break before getting the move back to 4,600 as a potential measured move. Finishing off with oil, well, the market has rebounded and nearly filled this little gap here from this area around $67 to $68 a barrel. And if this continues, then we could see the move further to the upside and look towards 72 to around $74 a barrel. However, geopolitical headlines remain the driver for oil, so let's see how it plays out. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the new weekend.